The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, my name is Jolene Schaefer and I'm the Marketing Coordinator for SWK Technologies. I'd like to welcome you to our webinar, The Impact of COVID-19 on Tax Policy for E-Commerce and Manufacturing by Rachel Lemieux and Maria Tringali of BDO and Avalara. A little housekeeping before we get started. Everyone has been placed on mute to keep the background noise down. However, you can submit any questions you have throughout the webinar. To submit a question, look for the questions section in your GoToWebinar. We will answer all questions at the end of the presentation. We are recording this presentation and it will be distributed tomorrow to all attendees as well as to those who registered but were not able to attend. Please take a moment during the presentation to answer our 3 poll questions. With that said, we appreciate you taking time out of your busy day to attend our webinar. We're here to help you get the most out of your software solutions and help you find an easier way to run your business by providing you software and industry knowledge, tools, and support whenever you need it. We've invited Avalara and BDO here today because they are the industry experts on tax automation and tax and accounting expertise, respectively. So whether you're here doing research for a new solution or you're just here to learn, we'd like to encourage you to ask any questions throughout the webinar. Lastly, as a quick reminder, SWK is constantly sharing important updates and software tips and tricks on our social media channels. So we encourage you to follow us on Twitter, LinkedIn, Facebook, and subscribe to our YouTube channel. Without further ado, I'll hand it over to Rachel.
My name is Rachel Lemieux, and I am a tax partner at BDO USA LLP. I have been doing this for about 35 years. I started off with the Department of Revenue in the state of Washington, and quickly, maybe after about 13 years, I entered into public accounting. State and local taxes became my passion. And am now here today to talk to you about one of my favorite subjects, which is Wayfair and the impact of economic nexus on industries, specifically manufacturing, and how it can impact your business. So Maria, would you like to take over and present and introduce yourselves?
Yeah, I'd be happy to. Hey everyone, again, Maria Tringali. So I'm with Avalara. I'm what we call a team lead or a product sales lead, which essentially means I specialize in working with manufacturers and distributors and all of the tax compliance and document compliance processes that they have to deal with and how our solutions can solve that. And I've been with Avalara 6 years now, and that entire time I've worked with manufacturers and distributors and B2B businesses. So looking forward to sharing some information with you and working with Rachel today.
Perfect, thank you so much. And so with that, I'd like to get in. We're specifically going to be talking about what's next for state sales and use taxes in COVID-19 and some of the impacts related to that. Also weaving in the impacts of Wayfair, what that means for you. So Maria, I'm going to hand it back to you real quick as we go through the first slides and go ahead and ask away.
Yeah, so you are obviously the expert there, Rachel. So first, can you tell us a little bit about what we've seen since COVID started and what we might see moving forward, what you kind of expect in your crystal ball there?
Right. So really, right before COVID-19 became the big news, before it hit all of that, state budgets were actually seeing some surpluses, and there were going to be some opportunities to actually do some great things in various states in terms of fixing various issues that states have because we had these surpluses. And then unfortunately, COVID-19 came about and we really took a dive in terms of state budget impact. And you can see some stuff on the screen here, but really we've seen almost a $200 billion negative swing between the last two years of the fiscal year and what's going to be upcoming. And this is just the tip of the iceberg. So now what states are doing is that they are either in legislative sessions, calling emergency legislative sessions, or getting ready for their legislative sessions to start in 2021. And they're really looking at now how they can make up their budget gaps. You know, when we look at kind of what they're thinking about doing, we are going to see probably significant increases in taxes, and whether that's new taxes or whether that is broadening the base of existing taxes, taking away certain exemptions, credits, or deductions. We do know some states like California, and this is not an income tax seminar, but we do know states like California have already suspended the use of net operating losses for a period of time. So what we know is that life is not going to be the same as it was pre-COVID for businesses, and it's really going to, I think, hit businesses pretty hard as we look at closing budget gaps.
So as we move forward, what do you think states will be thinking about, and what are individual states doing at this point?
Right. So up on the screen, we have what states did initially, particularly as it relates to granting relief for sales and use taxes. And you know, most of the incentives that they offered early on, which were to, one, extend filing deadlines, extend payment deadlines, and to waive like interest and penalties and things like that. A lot of those activities are expired. And what is happening now is legislatures are those that are in session have started introducing legislation to provide additional relief, specifically relief related to the getting rid of interest and penalties on folks who still have not filed taxes since emergency declarations were made on COVID-19. Now, right now, those are just introduced, and there's at least 2 states that have done it. They're just introduced. We don't know if they're going to pass. So it's something to be aware of, that if you still have not been able to get current on the payment of sales and use taxes in your particular states, is to pay attention to what they're doing to see if they are still going to grant relief. And we might not know this all the way through maybe mid next year, but the bottom line is we have to keep paying attention.
Wow, you think that'll continue into next year? That's interesting.
I think this is going to be around for what I'm going to deem long term. And long term in today's environment, to me, is anything longer than 6 months. Things move so rapidly that we can't say long term in 3 to 5 years anymore. We say long term in 12 months.
Right, that's so true. Yeah, true. So we'll keep watching it. Thank you for that.
Mm-hmm.
So I guess not switching gears, but talking about what's really near and dear to our businesses' hearts these days is that Wayfair ruling, or economic nexus ruling. I find in my world, Rachel, that the customers that I talk to every day have been affected greatly. Our manufacturers and distributors especially have been affected greatly by the Wayfair ruling. There seems to be a common misconception early on that the laws really pertained only to web sellers, but that's actually not true, is it? The laws apply to any business, no matter the size of the industry.
That's correct. And you know, there's a lot of different information out there, but the bottom line is that Wayfair affects everyone that's doing business, regardless of how they're doing business. So it could be just online sales, it could be a mix of online sales, brick and mortar sales, it doesn't matter. But economic nexus applies to everything. And of course, we never really did get rid of physical presence nexus either. But this idea that you can only exist in one state, but you have customers throughout the United States, you now have to look at how many transactions you have. You also have to look at the value of those transactions in a particular state to determine if you have crossed an economic threshold. And we'll get into that a little bit more in just a bit. And so now we'll actually have a poll question, and I'm going to turn it back over to SWK to work the poll question.
Thank you, Rachel. We'll now be launching a poll. Please answer the question that appears on your screen. All right, it looks like we have a majority of people who have responded. And it looks like a majority stated that it was 21 plus states or between 1 and 10 states.
Wow, interesting. I'm trying to advance my screen.
Yeah, go on to the next.
So hang on just a second. There we go.
Yeah, there you go.
Okay, all right. So
Yeah.
go ahead,
So one
Maria.
of the things, so one of the things I see again, so I work with manufacturers and distributors every day, all day long. And one of the things that we talk about, and sometimes our manufacturers haven't considered this. So you just saw how economic nexus definitely affects manufacturers and distributors in a big way. And that 20 plus is what I see most of the time. They kind of go from 0 to 60 or 0 to 20 or a lot of states, because you're in business and you've been doing business across state lines, as Rachel said, and you can no longer operate in just one state. So what I see is one of the big challenges, and I'd love to chat about this with you, Rachel, is how are we going to go collect all these new certificates? What I think companies are kind of underestimating is that experience of what that's going to look like. I have customers in these states that have been buying from me forever, and they were not paying tax because I didn't have a presence. And now I have to go and ask these customers for certificates. So let's talk a little bit about what Economic Nexus is and what you're seeing out there, Rachel.
Right. So again, just to kind of go over, Economic Nexus is a concept that came out of the Wayfair case. The Wayfair case being about South Dakota and making sales essentially remotely or over the internet. And really what the U.S. Supreme Court did was they said, okay, we are going to adopt now economic nexus laws, and because South Dakota taxes everything at a sales tax level, services, you name it, the threshold that the U.S. Supreme Court decided to adopt was in fact South Dakota. So if you have more than $100,000, this is in general, by the way. So if you have more than $100,000 in sales into a state, or again, generally 200 transactions over the course of a year, could be either or, then you theoretically have crossed the economic nexus threshold and would need to register to do business in a particular state, and to the extent that your sales are subject to sales tax, would have to collect and remit sales taxes. Now, of course, it can never be that simple, right? So while we say in general $100,000 in transactions, value in transactions, or 200 transactions, that of course is not necessarily the same across every single state. What you see here is a map where states have adopted economic nexus laws, and you can see it's pretty blue, right? And the reason why there are states with gray primarily is because those are states that do not impose a sales tax. We call them the nomad states, but then we also have Florida that has not adopted economic nexus laws, and Puerto Rico as well. So now manufacturers have to really pay attention to how much sales am I making into a state. Let's really brief example. Let's say you sell something that is maybe a huge piece of machinery. You make one sale, but that machinery itself is valued at $150,000. You're making it into a state that has that threshold. You make one transaction, but it's $150,000, and now you need to register and collect sales tax. And you may not have another sale for another 2 years, but the bottom line is you had to register and open yourself up to a reporting responsibility. So what we're seeing is a lot of people right off the bat. We had a lot of large companies get registered, start doing that, and we're starting to see now where other companies, mostly smaller companies, are just realizing that they now have this responsibility and hitting them hard. So we're doing a lot of mitigation strategies to bring people into compliance.
Oh, fantastic. Thanks. So,
Maria,
go ahead and click.
Kind of some of the questions that you get. Yeah.
No, go ahead and click the next button. So when I go to to trade shows, or do I do tons of user groups here? And always manufacturers and distributors walk up to me and they see that we're sales tax compliance, and they say, oh, but most of my sales are exempt, so I don't have to deal with that. Well, that's not actually true, is it, Rachel? And what we like to say is that it's not about collecting the tax, but it's really about proving why you didn't.
Right, and this is the big thing, and this is at its very basic. This is like sales tax 101 for anybody. Every sale, right, of tangible personal property and some identified services is subject to sales tax unless it's not. Okay? And what does unless it's not mean? It means that if a state has implemented some form of an incentive, either it makes the thing you're selling exempt, the person you're selling to exempt, or the use of the thing you are selling exempt, you can't just assume, well, I know that that's exempt and therefore I'm not going to charge sales tax. You actually have to prove through substantiation, usually through some form of an exemption certificate that your customer provides to you, that you were making an exempt sale. If you don't have that substantiation and you get audited, the state will assess sales tax on you, and you may or may not be able to go and get that back from your customer. So what we have is a combination of, you know, it's kind of this big wave that's hitting everybody. We have the implementation of economic nexus laws, which is throwing people to the fact, I don't ever set foot in Idaho, for crying out loud, right? I never go there. Well, it doesn't matter. You make sales into that state and you've crossed a threshold. And if you don't understand Idaho's laws, you could inadvertently cause yourself great pain, because now you need to register, you need to pay back taxes, and you're saying, but my stuff is exempt. Well, but can you prove it's exempt, right? Where are your certificates? And so that's kind of where we're getting to. Again, it's all about mitigation at this particular point in time with businesses, and trying to help them, you know, come clean, get into compliance, and understand how to report on a going forward basis. So I just want to show you kind of the, you know, kind of following along on this question of, am I really, you know, all my sales are exempt, what's the big deal? Well, as you can see from this map, a number of states provide exemptions for manufacturing machinery and equipment, right? And then the states in orange there are ones that actually tax it. But what we want to talk about is, you know, when you say, look, but all my sales are exempt. Okay, well, again, just like economic nexus laws, and they're not all uniform, neither are the exemptions in the various states. So we can say, as you saw from the map, right, the vast majority of states allow some form of an exemption for manufacturing machinery and equipment. And so what you have to do, though, is you have to understand the laws in the particular state in which you're selling your machinery and equipment, or the things that you manufacture, right? So, or the things that you purchase, quite frankly. So what you have, you may have something that's exempt in one state but not exempt in another state. And you also have to understand how a state defines manufacturing or manufacturer. You would think that those terms are pretty well defined, but they really are not. And so a manufacturer could be exempt, right? Or manufacturing could be exempt, or both, but you have to understand the differences and how those are defined. And then there are various tests, right, for determining whether the thing that you sell or the thing that you purchase would actually be exempt. And that's where you have to get into, does the state have a directly used test? In other words, it has to act or interact on the thing being produced. Does it have a predominant threshold, meaning the thing that you sell or the thing that you purchase has to be used more than 50% of the time in the manufacturing operation? Does it have an exclusivity clause, or a mixed or proportional use clause? And once you even get through that, then you have to figure out whether a state, you know, what type of manufacturing do they exempt, right? What about integrated plant theory? What about physical change? All of those things have to be looked at, and it would be great if they were uniform amongst the states, but of course they are not. So it just builds in a lot of complexity. And now that we have economic nexus laws, everybody is being exposed to this kind of analysis that has to be done to determine what they need to do with their business registrations and sales tax collection responsibilities. So Maria, we want to kind of go through. You got to ask your question again, right?
Right. So of course my question is, well, but all my sales are exempt, just like I said before. Do I really have to register? And honestly, Rachel, in reality, I have a lot of people who still say, hey, I'm a small manufacturer up here in Idaho. Small manufacturer, I don't think they'll ever find me. All my sales are exempt. The auditor will know that. What do you see in reality?
Yeah, I mean, it basically in reality, I'm seeing the ability of state audit departments, right, to basically, they're getting more sophisticated. I mean, the states always lag in their use of technology and in their information sharing and how they are able to, really conduct their business, which is to ensure that businesses pay the proper amount of tax to their states. They're getting more and more sophisticated. They're updating systems and they're able to share information more. Their audits are able to look, with data analytics and things that are popping up out there, they're able to find people a lot quicker. And we'll go into in just a little bit some of the ways in which states are able to detect businesses that are not registered and should be in their states. And Maria, I know that you have some real stories about how after the implementation of Wayfair and everybody's Nexus footprint essentially expanding, kind of what has happened when someone does not appropriately substantiate that their sales are exempt.
Yeah, so I got a million of them, but these are two of my favorites. These are customers that we've actually worked with. And this is kind of a typical scenario, right? You have Nexus in your home state. I got a manufacturer in New York. 99% of their sales were exempt. But then when they went through a Nexus study and they found they had economic Nexus in different states, they went from only managing 75 exemption certificates to needing over 1,000. That's 10 times. That's a lot of certificates and compliance that they needed to manage. And on the other end of that, actually not the other end, but another example is a wholesaler that sells across the country went from managing 500 documents in the state of New York to needing over 5,000. Can you imagine having to go collect these? This is a big responsibility for companies and a big undertaking. So this is what I hear every day. These are just examples. Every day I hear stories like this.
Right, and that's that's really the crux of doing business today, right? Do I need, or based on the implementation of Wayfair alone, it's like every business needs to have its own tax department. It needs to actually say, look, I used to have my accounts receivable or my accounts payable person handle everything. Well, when you go from 500 documents to 5,000 documents, it's like you need an army of tax people in your business. And so the good news is that as we kind of move through, there are tools and like that can help you. But the bottom line is that we don't want to ignore these types of issues that are coming up. I want to move into a little bit about talking about how do states find you, right? Because I do think it's important to understand that it's kind of a ticking time bomb out there. So how do they find me? Well, one of your customers gets audited. Okay, your customer gets audited and they see that there are invoices and purchase orders with your name on it, right? So they look at that, the auditor goes back and says, I see this name. They type something up, go into their system and they see, boom, you're not registered. That generates a business activity questionnaire to you and you have to fill that out. And if you don't, then they come knocking. I mean, it just really, one thing is don't ignore notices like that. You get audited for state income tax, right? Somebody says, I think this company's in here, I'm going to audit them for state income tax. The income tax auditor talks to the sales tax auditor and they find out that, that you're not registered. So boom, what happens is you end up getting that business activity questionnaire. Or you filled out a business activity questionnaire. All of those things are ways that they can catch you. How do they find me? Well, information sharing agreements. States now talk to each other way more than they did in the past. It was a slow process, 5 to 10 years ago in terms of using information sharing agreements, and now it's very, very quick. Automation at the state level has made, comparing things very easy to do. You delivered product in your own truck with your name on it, right? Some state auditor happens to see it and they're like, and believe me, it does happen. Some state auditor happens to see it and boom, you get audited. Plain old dumb luck is one of those things. I like to call it audit lottery almost, where the bottom line, it was just your turn and you got you got that audit notice, or you hit it big and everyone is talking about it. So, all over the internet these days, you'll hear about the young business person who, created the next big product and everybody wants it, or you've got an ad on CNN.com or whatever, and the state auditor's out looking at it and they go, I'm going to see if they're registered, and they're not, and boom, that generates the audit. And let me tell you, these are real stories. I literally cannot make this stuff up. So I had a client at a previous firm that asked me to please look into their other competitors, because he was charging sales tax and he knew that the others were not. So that put him at a competitive disadvantage, because people were obviously going with his competitors because they weren't charging tax. And he said, I need to stop that. And what he asked me to do was essentially to create a list of all of the tax cheat hotlines in all of the states, so that he could start calling them to basically complain. That in fact does happen, and it was a manufacturer that I was doing that work for. And then, like I said in my introduction, I was a revenue collection agent very, very early on in the mid 80s to the mid 90s. And there's this big event in Seattle, Washington, which is called the Opening Day Rowing Regatta. And it is a massive event for yachting season, the opening of yachting season. And it draws hundreds of thousands of people to walk, but it also draws about a 1,200 meter length log boom on both sides of this canal or this cut, and yachts pull up to it. Right, and what was happening was there was a revenue tax discovery officer that owned a very small boat, and on opening day he would go out in his boat with a couple of other tax discovery officers, and they would take pictures of the boats, and then they would go back and they would see if they were registered in the state of Washington, and if they were not, they all got letters. And some of these yachts are quite spendy, and they would end up paying. So that actually does happen. Another actual or real life example is stationing auditors, tax discovery officers and auditors on either side of the bridge that goes between Washington and Oregon. And there's this big shopping area in Oregon. Well, Oregon doesn't impose a sales tax. So a lot of people love to go down to a place called Jensen Beach, do their shopping, and like big appliances and whatever. And so there'd be somebody at like the Best Buy or the Home Depot or whatever at Jensen Beach. They take a picture of somebody loading something into a Washington license plate vehicle, and then they would take that picture. They were using radios back then. We didn't have cell phones, to say, hey, truck number whatever is coming across. And then somebody on the other side, just over the Washington border, would take a picture. They'd compare the two and determine that somebody bought a bunch of stuff over in Oregon, brought it back to Washington. Boom, big letter goes out to them, and they owe a lot of tax. And again, the publicity was the gotcha. Again, somebody hits it big, and you got this big publicity thing, and you end up getting that notice. So really, to kind of summarize this one as it relates to Nexus is, you can decide to take care of your Nexus issues today, or you can take care of them later. But the bottom line is you should not ignore Nexus, right? If you're acquiring businesses, did you just acquire a business in another state that also has sales everywhere? In today's COVID environment, this is actually a very active issue, which is you have employees potentially working everywhere, and those employees can create physical nexus. This is actually a big nationwide initiative going on right now to try to prevent states from saying that my employee who normally would not work from home is working from home, and that should not create nexus for me. But again, that's something we have to pay attention to. And then, did you just move all of your inventory closer to your customers, and that inventory sits in a third-party warehouse in a state that you were not expecting to be in? All of those things are things you should not ignore, because they can really make it spendy for your business, or actually tank your business in the future, because you are unable to pay the liability that the state says you owes. So how do we take care of that? Well, this is a process, and this looks like this should be a process for a really big company, but this is scalable down to any size company. So really, you've got to look. You don't have a tax department now, but maybe you should have a tax department. And you should be looking at transforming your business to make sure that it stays healthy for the long term. So you really got to go in and say, what's my current state, right? What do I want my business to be? If I'm looking to sell my business in 5 years, I want to preserve it for my family or my employees or whatever it is. If I don't take care of this stuff now, I may not have a business to give to them 3 to 5 to 10 years out. You got to figure out where your gaps are. How am I currently assessing my sales tax liabilities? And we are going to get into this idea of my sales, a lot of my sales are exempt. Why does this pertain to me? Well, it really does, and we'll talk about that. So you got to analyze those gaps, and then you have to figure out a path of how I'm going to close those gaps, and then work towards getting everything set up and execute, and then continue to review this maybe year over year. Again, I used to say long-term 3 to 5 years. However, I think you have to analyze things every year just because of the way that the speed of business goes today. So we've determined that we have Nexus. So then now what are we essentially going to do? So we have a second polling question. So SWK, I'm going to turn it over to you to run the next polling question.
Thank you, Rachel. I will be launching the second poll question shortly. Okay, and it looks like we have a majority of people responding. And the majority of people are between 76 and 100 and 51 and 75%. Pretty evenly split.
And again,
That's what I see.
Yeah.
So go ahead. Yeah, Rachel.
Okay, so Maria, let's talk about kind of what all of that means. And I'm going to just click on all of these to get this slide up and running. I think that's the last one. There we go. Okay, so go ahead, Maria. Why don't you talk about kind of the breadth of things we have to think about?
Yeah, so you just saw that the majority of people have over 75%. In our world, in manufacturing and distribution, a substantial amount of your business is to exempt customers. Yet, having been in the sales tax business for 6 years now, the initial conversation always seems to be around the tax calculations. Maybe that's the sexy part. Maybe it's the part we see on our invoices when we buy something. But the truth is, everything below the level there is just as important, if not more important. And I've highlighted customers. These are all the things that Rachel's been talking about, but I've highlighted customer satisfaction there. This is something that I see is often overlooked by businesses. The importance of getting this right is really important. Look at the percentage of your business that is to a seller who's exempt, and think about the customer experience. Do you want to go to the next slide, Rachel? Yep. So again, similar slide, but most of my sales are exempt, so I don't have a tax problem. But the opportunity here, the problem for many companies is that poor processes for managing exemption certificates can really create negative customer experiences, often without us even noticing. It's really important that we get this right, and we'll talk about that a little bit more. But think about that for a minute. How do we treat those customers? What processes do we put them through? What extra steps do we put them through to make them provide the right paperwork? So ponder that for a minute while we talk a little bit about the tax remediation.
Right. So you've listened to all of this and you said, I really kind of need to look at this. I need to have a better understanding of what my tax footprint is in light of all of the changes that have taken place in the last couple of years. And so what we like to talk about is remediating, right, your potential sales tax. And so it really starts with determining, do I actually have Nexus? And so a Nexus study, you hear a lot of people talk about Nexus studies. So you've got to go and say, okay, do I have Nexus? And then once you determine whether you have Nexus, the next question is, am I really subject to tax? And if I am subject to tax, what are the types of things that I am subject to tax on? So very early on, I spoke about needing to understand whether the thing you're selling or purchasing is exempt, whether the customer that you're selling to is exempt, or whether the use of what you're selling or buying is exempt. So making that taxability determination is important. And then once, and then also, what kind of state, right, am I selling it into? Is it a predominant use state, a mixed state, a directly used state, all of those types of things, because you do have to figure out whether something is or is not subject to tax. Once that determination is made, then you basically do your quantification. What really is my problem? What's the breadth, the value of my problem? And so the next step is obviously to quantify, right, my exposure and where I have that exposure. Once all that is done, then you move into, okay, well, so now I know all of that, what do I do about it? So we call it mitigation and disclosure. And so make a kind of cost-benefit of, all right, I figured out I have tax liability, and let's say I have tax liability of $50,000 in a particular state, and that goes back, let's say in this particular state, whatever it is, 3 years. So I have $50,000 over 3 years, and the penalties on that can be anything from like 29% up to 50%. It really depends on, again, on what the state rates are. And oh, by the way, I have interest. So is there a way to mitigate that? Well, yes, there are programs called voluntary disclosure programs, amnesty programs, that type of thing. And you really work with your tax advisor to file a voluntary disclosure. Advantages of doing something like that are limiting your look back period and the elimination of penalties. There's a lot more to them, but that's in general how it works. Or you figure out I have liability, right? But the penalties aren't as much as what the cost of doing a VDA would be. So I'm just going to go ahead and register my back taxes and kind of move forward. So that's really the mitigation and disclosure piece. But then following on with that is, do I actually need to look at a better system for handling this? Because if you're somebody that went to filing in 2 states to suddenly needing to file in 20, 30 states, you have exponentially increased the record keeping requirements you have, the number of returns you have, and of course, no state is the same in terms of due dates, right? So we could have due dates on the 25th, we could have due dates on the 20th, we could have 30th, we could be in New York, which has this really odd 13th month due date. So you have all of that. How do you manage all of that? Well, that you really then need to look at, do I need to automate my sales tax collection and remittance process? And if I do, then following on with how do I actually comply on an ongoing basis? So it's really a process of starting in the beginning. Do I have Nexus? If I do, what's taxable? If I do, how much is it? How do I mitigate it? Do I need to select a system to help me so I don't have to hire an army of tax people? And then how do I take care of it on an ongoing basis? So here I really suggest consulting with your tax advisor, right, to make sure that you understand what your liabilities are if you have them. Again, one last item before I pass it back over to Maria is we keep asking the question, all of my sales are exempt, now what? Well, what makes this look at Nexus, taxability, and remediation very important is because some states, when they looked at Wayfair, and we know in general it's $100,000 in sales or 200 transactions. How do they define $100,000 in sales? Okay. So if I have $100,000 in sales, but this state says my sales are all exempt, does that state's law say if all of your sales are exempt, we don't need you to register? Or does that state say we don't care if your sales are exempt, we still want you to register and file 0 returns, right? Or does that state say, I want to look at all of your sales? Some people do more than sell at retail. They might sell at wholesale. They might do things like that. What's the definition of gross sales? All wholesale plus retail? Is it just retail? Is it just taxable? I mean, again, part of why I have a job is because we can't get the states to be uniform in definition. You really do have to think about all of those things and deciding. So Maria, I'm going to turn it back over to you to kind of talk about what does sales tax automation look like?
Yeah, so now you've gone through this whole process with Rachel, and now it looks like we have more states we have to register in and a little more work to do. So this is a slide that I put together, a list of questions. So I'm going to pause here for a second, just let you read through these. I always encourage businesses that I talk with to ponder these questions. What is our new world going to look like? Is our current process scalable, right? What we're doing now, is that even scalable? What do we have now? What do we need to collect? As I mentioned earlier, how are we going to interrupt the process flow, the sales order flow, without holding up orders to collect new documentation? There's just a lot of things to think about in the new world. All of these things that Rachel's been talking about, we have to get our ducks in a row, and we have potential of being audited, and how are states going to find us? What do we do with our processes? And so most businesses, especially manufacturing and distributing, have a limited accounting department. I mean, most businesses in general have a limited accounting department, and they just don't have the expertise or the wherewithal or the time to go out and do a lot of this work manually. So this is where automation comes in and becomes really relevant to manufacturers and distributors. And one other thing that I hear all the time is, I have a document management system already. I can't impress enough on you that managing tax compliance, is not document management. A document management system does not communicate with your customers. It does not serve up documents that can be completed by your buyers. It doesn't validate any information. It doesn't have reporting, maybe very minimal. And it certainly doesn't improve customer experience or create a compliance workflow. So what we're talking about when we're talking about automation in the compliance world for document compliance specifically is turning that information from one-dimensional data or information into pixels, into usable data. And that process starts with the customers. It is super important that we think of customers first here, and we get all of those exemption certificates into a platform before we make the next sale. It's not practical to think that I can just collect them at the next time a customer makes a sale. How do you know what you're collecting? You have to stop the order process. Maybe they're in a hurry. It's extra work on your staff. There's just so much to think about. So when we think about the tax determination workflow of determining how to tax someone, it really starts with the customer, and then it starts with getting that information into the system, and then the automation will check to see if that customer is actually taxable. If that customer is taxable, we're not going to need that tax calculation. Is not taxable, is not taxable. We're not going to need that tax calculation. Remember the tip of my iceberg? That's a very, very small part of your business. Remember, 70% of your business is exempt. So it's super important that we have that information on file. If it happens that that customer is not exempt for the 20, 30, 50% of your business, and we do not find documentation for them, then automation is going to go ahead and do the tax calculation, determine how that product is taxable in that state, and return a tax rate onto that invoice. So the tax calculation is the second part of the process. And then to take that one step further, the full compliance suite of automation includes actually completing those returns forms for you. So we take all the information from your sales, taxable or not, and we complete those sales tax returns for you, no touch, based on all of that information. And then you have the opportunity to reconcile those returns with your general ledger, but you do not have to go through the manual labor of running multiple reports out of multiple systems and completing the busy work of the forms. So to add to that, this is what we're seeing a ton of these days. We talked a little bit about some of the changes with COVID back in the beginning of the call, and a lot of what we're seeing is, obviously, we've seen out there in the world, is businesses wanting to direct more and more of their business to an online shopping cart, to a website. This goes for B2C, but also almost more importantly for B2B. B2B has traditionally been a fairly labor-intensive part of a business. Yes, it's the bulk of your business, but there's a lot of hands, a lot of people involved in that process. And one of those parts of the process is collecting that exemption certificate. So CertCapture, our platform, has the capability to connect directly with your web shopping cart, whether it's custom or it's off the shelf. We can integrate directly with that shopping cart and create an in-cart experience where an exempt buyer can provide a certificate right there at the time of sale. So you can see in my example here, the platform has calculated $31 of tax, but we've also asked the customer, the buyer, if they would like to be tax exempt. And we give them the opportunity to provide that exemption certificate right there at the time of sale. And it will, once they submit it, it will actually wipe out that $31 and accept that certificate, which you can then view later and make sure is valid. But it does not hold up the sale because your customer is exempt, and it does not create extra work for the staff to stop the order, call the customer, and try to get the certificate, et cetera. So it makes for a really, really smooth shopping cart experience. You can take that one step further with the My Account experience. So if you do have, or you'd like to create a My Account experience for your B2B sellers, you can take that one step further by allowing your customers, your buyers, to submit those exemption certificates into their account. They'll go directly into the platform and can be applied to sales moving forward, and it allows them to manage them themselves. So what I love about this is it puts more of the responsibility on the buyer to provide the right information than it does on the seller. It is the seller's burden to prove that they have the documentation, right, Rachel? But it is
correct.
the buyer that has to provide it. And I love how this pushes a little more of the responsibility onto that buyer and by serving up the right form, et cetera. It's really, really popular, and customers are really loving it.
Yeah, and again, these are simple statements, but they're so true. And again, go back to the very beginning. Every sale, right, is of tangible personal property and certain services is subject to sales tax unless it's not. And so the proving unless it's not, that burden falls to the seller, to you, the seller. And or if you happen to be the buyer, to provide that exemption document to the seller to prove that you should not be subject to sales tax. So it's without it, and this is another story that is actually very true. There was a manufacturer up in Michigan that got audited by another state. This is post Wayfair, got audited by another state. And they had to spend an inordinate amount of time going back to their customers to get exemption certificates. And in that process, they found out that probably 30% of their customers were not exempt, and 70% were. Of that 70%, they were only able to recover about half of the certificates to prove the exemption. The other half either weren't in business anymore, would not comply, or for whatever reason. And so that just doubled the amount, added to the amount of tax that the taxpayer or my client was subject to. And of those that should have been subject to tax in the first place, same kind of story. They go back to them to say, hey, you purchased this from me. I'm sorry, I should have collected sales tax. I didn't do it. Can you remit? Well, of that, that's about a 3 to 5% success rate where you go back and actually say you owe me sales tax. So all of that came together, and my client ends up paying tax they shouldn't have had to pay if they had done this correct in the first place. And what makes it doubly worse is that they received audit instructions to make sure that they collected exemption certificates. And if they got audited again and they had not complied with the specific written instructions of the tax department, they would get assessed a failure to follow written instructions penalty. And a lot of times that can be up to 50% of the tax that is assessed. And again, remember, sales tax is usually not the seller's debt. It's the buyer's debt, but not in all cases, but it's the buyer's debt. But the state's not going to go against the buyer. It's going to come to you because you've been tasked with the responsibility of collecting. Unfortunately, this business, dumb luck, got audited the next year, and because they had not complied, got assessed a massive penalty for failure to follow written instructions. So all of this is to say, please don't ignore it, especially if you're trying to build your business to for you, for your family, for your employees, for whatever it is. We want to make sure that we're taking care of this so that the business retains all of its value into the future. And with that, I'm going to turn it back over to SWK. We have our final polling question.
Thank you, Rachel. Please answer the final polling question that will be shared on your screen shortly. All right. It looks like we had a majority that responded.
Perfect. And what was the response?
We had some that would be interested in information on tax compliance and some that are here to learn.
Perfect. Sounds good. Well, at this point, we are turning it over to the audience for questions. So first of all, I want to thank you very much for being here and for listening. BDO is a nationwide public accounting firm. In fact, we're the 5th largest in the world, 7th largest in the United States. We really do handle a lot of middle market companies and above, actually runs the full gamut. So would just like to say, if you have any questions whatsoever, please do get a hold of your tax advisor, whether BDO or not, and let's make sure that we take care of any questions that you may have.
Thank you, Rachel. We'll now open it up for questions. If you have any questions, please enter them into the questions section of your GoToWebinar. We'll give that a minute in case any come through. And just a reminder, everyone, we do have subject matter experts here. This is a great opportunity to have your questions answered in real time. All right, it looks like we did have a couple that came through during the presentation. The first is, what about me as a manufacturer selling through a marketplace like Amazon or eBay?
This is Rachel. I can go ahead and take that. Selling through a marketplace is something that you need to look at because many states have implemented what are called marketplace facilitator laws, which places the burden of sales tax collection and remittance on behalf of the seller, right, to the marketplace. So for instance, if you're selling through Amazon, Amazon is required to collect the tax and then sometimes remit that tax directly to the state. Or to at least tell you what you have to remit to the state. The issue comes when we have omni-channel selling, so you're selling through brick and mortar, you're selling through your own website or eBay or something, and you're also selling through somebody like Amazon. Those are omni-channel sellers, and you have to be able to merge all of that data to understand, have I correctly collected, right? Or has the facilitator correctly collected and remitted on my behalf? And so I'd like to turn that over to Maria to kind of talk about through automation, how that can be done easier.
Right. So through automation, you would simply import the transactions through a marketplace, and our system is set up to actually already know what tax was remitted to the state already. That's part of the import, and what hasn't been remitted. So automation definitely takes those into account and makes for completing the sales tax return super easy.
Perfect. Any other questions?
Yep, we have another that came through. I'm a business that exceeded Nexus. Do I still have to comply, and what's the risk of not complying?
Right. Well, I'm going to give you the technically correct answer, and the answer is yes. You have exceeded Nexus, and you should determine through a review of that particular state's laws whether, in fact, you would be required to register. And again, the risk to your business, it can be devastating. If you don't take care of it now, and we're 5 years, 6 years, 7 years down the road, and a state comes knocking before you go to the state, that liability can go back into perpetuity. And so what you want to be able to do is you want to be able to say, I don't want a 10-year liability. I instead only want the statute of limitations liability, so I'm going to come forward. But again, that's where we go back to understanding what is your Nexus footprint, right? And in determining that Nexus footprint, there's another added element, which is understanding your total tax liability. And total tax liability means I may have an income tax liability, I may have a sales tax liability. I'm going to look at everything, because if I just register for sales tax, I may inadvertently do something on the income tax side that I need to take care of, or vice versa. So it's really understanding what responsibilities for tax do I have into the states in which I'm selling. And that is done normally through a Nexus study. And figuring out what your liabilities are, and then what your mitigation strategies are. So yes, there is a risk. The risk is you could end up owing hundreds of thousands of dollars that you, quite frankly, do not have easily without loans or warrants or things, having a state file a warrant against you or whatever. So it's like, don't ignore Nexus, take care of it now.
All right, and we have one more that came through. What about customers or partners in Washington or Oregon that state they do not have sales tax? How can we sell something like Avalara to them? They automatically decline every time I mention it.
Maria, before I take that over, I want to address the Oregon question, right? Because I too have that exact same issue. I go down to Oregon and I say, hey, let me review your sales and use taxes, and they go, but we don't have sales and use tax here. And we're like, yeah, but there's sales and use tax all over the country. And unless you're telling me you only sell in Oregon, right? Which I know is not the case most of the time, right? Oregon businesses need to pay attention to what they are doing nationally and take care of it that way. And even if you're only selling in Oregon, I am sure that automation helps with the whole, keeping track of your sales. So Maria, do you want to address that from kind of Oregon and beyond?
I would have exactly the same answer. And I literally did just talk with a business recently that it's hard when you live in a state that doesn't charge sales tax. It's hard to comprehend that the rest of the country does. And it's not the state of Oregon that's imposing that law, it's the other states. So automation can certainly support that scenario. There's obviously no tax in your home state, and you just tell the software where it is that you need to assess and collect tax. And the important thing to remember about sales tax is it's not you paying it, it's a pass-through. You're collecting it from your customers and you're remitting it to those states. And if they're exempt, then you just ask them for exemption certificates, just as we've talked about. So easy to solve, hard to comprehend.
Yep.
Perfect. Well, that looks like all the questions that have come through. So thank you so much, Rachel and Maria, for your informative presentation and for taking the time to be here today.
At the very end is our contact information. I believe you're going to get this slide deck. So again, thank you so much.
Thank you. Have a wonderful rest of your day.